Well, home buyers beware. Mortgage rates are yet again on the rise.
That's right. But if you tune into us on a regular basis, you'll know the latest spike comes amid a robust labor market and stubbornly high inflation. According to Bankrate's national survey of large lenders, the average rate on a 30-year mortgage rose to what? 6.44% this week. Am I getting that right? Yes. That's up from the previous week and well above the lows seen around 2021. Now, this comes as the Labor Department reports wholesale prices rose 0.7% last month. May seem small, but it is the biggest increase since June.
The Labor Department also reported today first-time jobless applications fell to 194,000 last week. That marks the fifth straight week that claims were under 200,000. Joining us now is Alcynna Lloyd. She's an economy reporter for Insider. Alcynna, normally a strong job market is a good thing for the economy, but in this case, it impacts mortgage rates and not in a way that's good for a home buyer. Explain that.
So essentially how that happens is basically as the financial markets look at how the job market is performing, it tends to impact how the 10-year Treasury or bond yields tend to work. Usually when the 10-year Treasury declines, that will also impact mortgage rates, which will tend to retreat as well. So jobs do translate to a healthy economy, but that necessarily does not mean that mortgage rates are also going to trend lower.
So give us a bit of a forecast here. How long can we expect mortgage rates to continue to creep up and demand fall?
Long-term mortgage rates are currently at 6.32% right now, according to Freddie Mac. The Mortgage Bankers Association does foresee them dropping to 5.2% by the end of 2023. And that really depends on the 10-year Treasury and bond yields, as I mentioned, as they are closely correlated, as they tend to move together as well. But just because rates do drop this year does not mean that we'll see a rebound in home sales as we saw, let's say, in 2020 and 2021, when we have robust home buying activity.
So, Alcynna, if somebody's looking at potentially selling their home, buying a new one, or being a first-time home buyer, how do these factors, rising mortgage rates, climbing wholesale prices, falling first-time jobless claims, how does all of that push the Federal Reserve to potentially continue to increase rates? What's your prediction then for whether they should hold until the end of 2023 to buy, or if they should buy now because in many cases the effect on mortgage rates means that the effect on the prices might also be something positive for a buyer?
Well, I've talked to many economists and analysts that do foresee that home buying activity will definitely pick up this year, but it won't be like what we saw earlier, like I mentioned in 2020 and 2021. So if you're a home buyer right now in the market and you're interested in buying a home, mortgage rates are probably leading your home buying decisions. But something to keep in mind is rates, although they do remain high, are still historically low compared to some rates. I've talked to analysts and reporters that have said that they've also, back in the day when they were purchasing a home, their rates were as high as 12%. Today, we're sitting about 6%, which is still pretty affordable. So people are interested in purchasing homes. My best advice is to pay attention to their own financial, their budgets, and see what best aligns for them possibly.
Yeah, so many factors at play, but we all want to make the smartest decision, and that's why we brought you on to help our viewers out. Alcynna Lloyd, great to have you today.
Thank you.